CPI came out and it was right in line with what expected, even after a really confusing PPI, which we're going to get to in retail sales tomorrow. We have a lot to go through. I want to go through the technicals first, and then we're going to drill into the fundamentals and what changed specifically with interest rates, what dropped today, and what to expect tomorrow after retail sales, because I think there's some things setting up here. But let's get into this a little bit. I'm going to mark off 3 key levels here that you can see on a 4-hour chart. And this is just the ES. We're going to start here, and then we're going to dive into the NASDAQ and focus on that as well, because we're starting to see a divergence. But as all of you may remember or may not, this move right up here that happened, this was when we had the last CPI, and that was on July 11th. And now you have today's CPI, which is right here. Now, before we get into the data and drill into it, I think it's important to remember this was negative. So this was the first negative CPI that we have ever had since the pandemic. It's not normal to have a negative CPI. It means that goods and services are being bought at a discount to the previous month, which is a clear sign of a recession. Everybody freaked out, and then we started to have some rotation into RTY, as we all remember, and then we have what happened here, and we're going to get to that in a second. But we could all realize that this is the peak, and this is not the peak. We would all agree on that. I don't think that that's really up for debate. So if we take the peak and we just drop a 50% line, now what I'll do here is I will move this out of the way, and we'll just drop that there for a second. And what we're going to note is this 50% line was held, and then all of a sudden, wham, Japan, and no longer held. Now, what happens here is the yen trade. And just for we're all clear on the yen trade, again, what they do is they short the yen. After they short the yen, they buy the dollar or another denomination, and then they buy assets with that dollar denomination, whether that is stocks or bonds. Therefore, when they raise rates, that short, the cost of that short goes up in value. This that was cheap is no longer cheap, and all of a sudden the arbitrage of that gets tighter. They have to unwind it, and then the assets or debt instruments that they bought from here, they have to kick out, right? So we all can understand why the market fell there. We all get that. Unwinds, and then the cycle is complete. Okay, now what do we have here? We have this level right here that's 50%. So what we're going to do is we'll clean all this off, and then we're just going to go right back into this level, which is right around that 50% line. This is really important to get because this is what happened today. Despite everything, if we look right in here at this particular level, which you were unable to close, retest, then we got hit with the unwind, which was a disaster. Comes up, retests that area again. Stay with me. See it? And then you're coming back up. You had a decision to make. Well, you made a decision. You might not like the way the market acted today, but this 4-hour right here on the ES, that made a decision. Now, why you should care about that is because all that's left is this. So tomorrow we have retail sales, and we're going to go over that retail sales numbers and all these numbers in a moment. There's a ton to go over tonight, from Warren Buffett's new positions to what to do with NVIDIA going in the next week and Jackson Hole, which we'll probably cover for Saturday. So you're probably going to want to subscribe to the channel if this is important to you. But what we're seeing here is a clear shot. Now, how do you know it's a clear shot? Or what's one way that you could determine it's a clear shot? There's a couple ways to do this. You could do the fixed range VWAP. You could do an anchored VWAP to here. One of the easiest ways to do it is you kind of just click on the spot and boom, it'll drop. And what you'll see is the ease that we were going to go in there because you didn't have what? Supply. And all I did was drop an anchored VWAP from here over. And you can also see point of control. Point of control, for those that don't know, is not VWAP. VWAP is VWAP, which is volume weighted average price. So if I go here, you're going to get a number down here. Point of control is where the most execution was. VWAP is where what? All the averages are of volume weighted average price. So you see the difference, point of control, where the majority took place. So if someone said, well, where's the majority taking place? You're going to say, well, that's point of control. And someone's going to say, that's VWAP. And you're going to say, you don't know what you're talking about. So now you know the difference. All right, let's keep going. So what happens next? I'm glad you asked. Once you get through this 54.92, there is nothing there but blue skies. Is it possible they're waiting for the last thing to get out of the darn way, which would be what? Retail sales. Yes, it's very possible that all they're waiting to do is clear retail sales, move forward, and then what do we have? Jackson Hole and NVIDIA, and the cycle of life is complete, right? So we're going to want to watch this level tomorrow very, very clearly and see what happens when we get up here, if and when we get up here. But this is a straight shot, guys. I mean, it's very clear. Do you have roadblocks? Yeah, you do, because you're completely overbought, but you can stay overbought for a very long period of time. From July 3rd to July 11th, we were overbought. We're trying to get through Thursday. So this overbought's not really something I'm overly concerned about. Drop it down to an hour, and let's clean up all my nonsense before we go to the NASDAQ. And yeah, this is a little concerning, but it's been concerning all day. Where people, I think, are really dropping the ball is thinking that they're going to trade like they traded 2-3 months ago, and you're not. Please remember this because it'll save you a lot of time. So I'm going to go and deviate here so that you have something to work with tomorrow. See this right here, how the 22 and the 55 are sitting here? If you are below the 55, you don't have institutional support in the market. Look how light your volume is, all right? You don't have institutional support here. So that's why you're seeing these wild swings and you're like, why aren't my breakouts working? Why aren't my breakdowns working? In other words, when the shorts are supposed to crack, why aren't they? And when they're supposed to rally, why aren't they, right? It's like opposite day. I'll show you how we took advantage of that today. And a very easy way for you to spot these, they're just called retest levels, and I'll show you them in a second here. But please be aware of where you're at. And it's important for me to spend time on this before we go to the next thing. And there's a bunch of other things here, but let's clean all my nonsense off and we'll start here. 22, 55, 12. You should use what you're comfortable with. For me, these are lines, look at the volume, there's hardly any there. But for me, these are lines that I use for very specific reasons. I'm going to explain them. The 12 I use to determine, should I be doing a swing trade in this market or not? Yes or no. Above, yes. Below, no. Who's in charge? Bulls or bears? 22. Above, bulls. Below, bears. 55. Do I have institutional support? Yes. Below, no. Okay, so I have no institutional support. The bears are in charge, and you guys are wondering why your breakouts aren't working. All right, welcome to the party. Swing trades are starting to work a little bit better, aren't they? So we're starting to see that kind of kick in. Right? This is how I do it. Some people just go 10, 20, 50, and they're very happy with their lives. You should use what you're comfortable with. Let's get to the 4-hour drill into this. And again, I'm talking fast because there's a lot in here. And then what I want you to do is just go back and watch the pieces. I'm trying to pack more in during the weekday right now because you have a lot going on. I mean, you know, it feels like only 2 days ago we were worried about a war, that all of a sudden now that Iran's having problems overnight where their entire banking system crashed. So, you know, all of a sudden, you know, we don't seem like we're going to have that issue any longer. But if we look here at how some of these things are setting up, there's a DTL, downward trend line, and we're flipping that. It's always nice to just take a moment and figure out where that peak is, which just happened to be where? Right around that CPI. Okay, that made me very cautious of this CPI. And this one's a little different, guys. You have a real battle going on here with that 50% line, and you have nothing in here that I can move it up a little bit and say we're scooting up like I could with ES. You don't have anything here. So when you're drilling into this, I have this doji that's sitting there and then we're flipping. The only sign that I could give you is this is 4 hours and now this is fitting inside that, which means we're working off the wick. But retail sales is retail sales, so it's anyone's game tomorrow and we're going to have to watch how that plays out, right? But again, if we just do the most simplest of things and go and take a look at, well, we could start here with the anchored VWAP, and you can see that you are not above peak anchored VWAP, which is very different than where you were when we looked at what? When we went and looked at some of the other holdings, we could see where we were at, correct? We saw that we were above anchored VWAP there. And if we look here and we mark from that area, well, this looks like a disaster. Like you're in the heart of it, unable to get over point of control. So that would be a great level to watch tomorrow. Maybe that 19.2 level might be an area that you want to pay attention to. Do we have some issues? We always have issues. But you can see that 4 hour right here as you popped over, so you're overbought. Again, you could be overbought for days. What you're not is oversold. So you're not expecting this huge bounce, but you're trying to get through here. But if we get through here, then we have point of control. Then we have all this nonsense. Then we have the VWAP. And then after this VWAP, which, you know, probably not the worst idea if you're interested to just put an alert there. Because if you get into that, you've got like a little pocket where you can just pop. But this looks very different than if we went here and looked at ES. So if you were going to play futures or contracts tomorrow, and you were looking at these two markets, which one looks a little bit better to play, right? You have to kind of use your imagination there and go from there. I think that's really important to look at. I also think that this is pretty important, what happened here today with the stocks and how this just kept pushing. I want to show you this on the daily. You are flipping here on the RSI, and you can see right here how this flipped, right? Now you have a buy signal here. Since then, it's held. The other thing that's back, like we're back just like Trading Places, if you ever watched Trading Places. All right, there it is. So you are back over anchored VWAP. At the time of recording this, I am currently long this sector, completely long the sector in here. So I like what I'm seeing here. Now, do I have issues? I always have issues. And this issue is I'm above the swing trade, but the bears are still in charge. Now, I'll find out tomorrow what exactly I'm dealing with. But if I was going to sell off, I can't think of a better day to sell off than CPI coming in the way that it did, right? But instead, this presented what was like really cool day to teach some things in the community, but which I think they liked actually today, but they usually do like it. But you can see you're right here in the 55 with NVIDIA and how you're fighting that area, right? But this presided like a really good opportunity. We traded this pre-market, but then it gave us another one, and I want to show you this, and I'm going to show it to you live too, so that you can see this live. What I'm going to do is go to a bear chart, and then what I'm going to do is just show you this from here. So what we were doing while this was all setting up was just watching these levels. And you see what's happening here? You should be able to already see this right here, but let's clean this up and so you can see it, and then I'll show it to you live. See how you're fighting this area over and over and over again? See how you undercut here? So this is what they love to do in markets like this being the man, really algorithms and high frequency traders. See how they undercut you right here? Because who's going to put their stop there? Everybody and their sister that went long. They're all, oh, I'm going to just put my stop at the low of the day. How'd that work out? Right? So then they basically take your stop and then they rip you up, and here you go. And then the bouncing game, bonk, 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 bonk. So should you have ever gotten out? No. So what we did was we watched, and then after it started to set up, we just let it go, and then we went from there. This is a really good one. I'm actually going to do a video on this one. I think that this was worth everyone's time. What I'll do is I'll make this a 9 real quick, just so you can see it this way. And then we'll go from there. Let me make this white. I'm not going to have time to edit this because I have another conference call at 6 this evening. Excuse the voice. It's been a long day, guys. It's been a long week so far. But see what you flipped right here? All right, so what are you looking for? I'll do a whole video on this. 2 greens above a 9 EMA. All right, so you have 2 greens above a 9 EMA, overlay this with a 1-minute chart. It's either going to work or it's not going to work. It's that simple, guys. Like, not everything's going to work. But you see how you made a lower low here, right? And then what happens? You went lower. Then we made a lower low, and see how this is higher? I don't use the moving average. I'll leave it in there sometimes. It's like training wheels. I don't need it, but after a while, you can just, you know where it is. But here to here to here to here, you should see the divergence, right? Lower low, higher low, right? So you should be able to see it. I'll mark it off real quick just so you can get it. And again, please comment on this, but I think this is a really good teaching one between that and the 9 EMA. And then we just sat around and had patience all day, and we just let the stock play out. And this is exactly what you need to do in this kind of market, guys. I'll show you another one that was on a longer time frame that worked out perfectly for more of a longer term idea, but people used it for a day trade. But you see this right here? That was it. That was the whole trade. And it's either going to work or it's not. So you want to execute it as soon as you can because you want the lowest price. And then it just traded out, and you could do whatever you want with it. You could hang on to it or stay with it. That's up to you. I held some overnight, and we'll go from there. But let me show you this live. Test, retest. Remember we went over this on Saturday? Test, retest. So you have a positive divergence, you have a test and a retest, and now you flip the 9 EMA. If you're trying to do this trade, this is where you try it. It either works or it doesn't work. You quantify your risk and you do the trade. Do it just for the heck of it so we can watch it. It's going to cost $1.80. So you'd quantify it from there. It either gets through or it rejects. You can always change your mind like as it's going, but this is where you would do the trade. If it undercuts here, you just got to get out of the way. You're already getting weak as soon as you got back to that gap fill. So that's telling you still have people here that are trying to get out. So it might not work. Actually, it's starting to get ugly. So you might get stopped out here. That NVIDIA trade, you're basically break even on. So if you're concerned about holding this thing now, here's your chance. If you want it out, there it is. And you're right back here again, and you can see the battle going on. So again, if you're in this day trade and you're like, you know what, I just don't like it anymore. There's nothing wrong with that. How many times down here did you try and break already and you're just not breaking? 1, 2, 3, 4. Here's your low and then high, and then it's higher. But each time you're working off of whatever the supply is there. There you go. Welcome to the party. That's getting pretty clear where they're going. That's actually a pretty big deal that you're through, that you're in that gap. You at least get up to here, 1671. So there's that level. So if you bought in here and you got to here, you should be pulling money out of $1. You would be pulling money out of the name if it's a day trade, or you just leave it on and just use the stop. Now, I hope you found that helpful. The key thing I want people to take away from this is you're trying to get ahead of things and you need to have patience. If this just bounced straight up, then we missed it and we just go to the next one. You really need to think in terms of abundance, especially in this kind of market. Don't think in scarcity because you're going to make the wrong moves. Now, really classic example of this was something like Starbucks today. I really like the name. I made sure right off the open I started my position. My better position came later in the day when I added to it. And all I did was something really simple. And I'll just show you what I was looking for. And this actually turned into a pretty decent day trade. But also, I want to own this. And I'll just show you what I did. It was not really that complicated. 1, 2, 3 down. Just one of these patterns. I actually did some candlestick videos you can look up where I went through these patterns. But see how this bar is big? See how this one's smaller than this bar? See how this bar is smaller than that one? This is a classic bullish homing pigeon. You see how that is right there? See how the undercut of that bar under that one? It's called the bullish homing pigeon. Boom, bonk, that was it, flips, and then it was on like Donkey Kong. And this gets it's like $2.50 if you were just doing it for the day trade. And I think I put it out there. If they wanted to do the day trade, everybody was getting off me because they don't like the coffee there. I'm not doing it for the coffee. I'm doing it because Elite Management bought it. But you held in there, and I really like this idea. But this is looking out weeks. Other things that we need to go over, and I covered this today in the pre-market public, which I would strongly suggest that you pay attention to. Even if you can't attend, just watch. Any of these Argentinian banks are completely levered to us in the U.S., I'm in the U.S., cutting interest rates. Completely, utterly levered to us cutting rates, okay? They all own sovereign debt. Sovereign debt was at default ratios before that gentleman got in. Once he got in, the bonds, sovereign bonds, started to go up in value. If we cut rates, which we are going to do, their sovereign debt will probably trade over parity, right? These bonds were, I think they were around what Turkey was or Pakistan at one point. That's what the chances of default were. So this is really good for the banks because banks in Argentina, like banks in the US, own treasuries. They just happen to own Argentinian treasuries versus us that own U.S. Treasuries. So if you think about it like that, it makes sense. And if their coupon was, I don't know what it was, but let's say it was 11%. I think that's what it was at one point. And ours is 4. Do you think you're going to have people that are going to buy those? Probably, right? And then they're going to trade at a premium. And that spread will get tighter and tighter. But that's why these banks are going up, because their assets are going to be through the roof. And this is a really important distinction. People think that this is over, and they're not understanding why this is moving. Guys, this is why it's so important for you to understand not only the fundamentals, but the macro aspect of these trades. That's why I keep preaching this over and over again. Macro, fundamental, technical. People will look at this and go, oh, it's too high. They don't realize that these banks in Argentina are about to be extremely flush. So you're probably going to want to watch this, and you're probably going to want to pay attention to these banks. It actually makes more sense for those that want to play this trade, like play the banking trade on steroids, to take the risk of Argentina than to even play our regional banks. The more I think about it, we're in all 4 of those names long term, and obviously we're doing very well with them and with Argentina too. Let's get to the fun stuff. All right, so in today, you're going to see something that we normally don't show, and you can probably already see what that is. So in front of us, I have France and the EU, and I have this in for a reason. I am not an expert in this field whatsoever, but if you look at the inflation rate in France and you can see where consensus was and you came in bigger than expected, there are 3 names that I watched that moved today, and I was trying to figure out for the life of me why one of them moved, one that I like a lot. I know where we are, and I know where the French are with their bonds, but look at the French bond auction. I guess they call it an oat. I guess they want to be cool. I don't know. But you can see how these previous auctions were and where these auctions went, which clearly signifies that inflation is not only coming down, but they are doing something with their interest rates that is going to drive demand for the consumer, right? All right, stay with me on that thought because we're going to come back to that in a second. But just remember this and you can rewind that. I'm trying to pack as much in today, guys. I'll get into more detail on Saturday. Here we are, core inflation. Core inflation is without food and energy, 0.2. 3.2 core inflation, right in line, perfect, almost too perfect, one would say. Inflation month over month, 0.2, negative 0.1. This is a number that scared us, and that was that July 11th date. Now we got through that, boom, right? And now here we are on the other side, and they're like, no, look over here, this number's much better. 3%, 2.9. Look, it is what it is. Are these numbers finagled? Maybe, maybe not, but this is the hand that we're dealt, and I'm certainly not insinuating that. But here we are, even though we had crude oil drop 10% and gas dropped 6% month over month. Miraculously, this number came in right in line with the expectations and even higher than that one. But I guess we could tear that number apart and go take a look at it. But the bottom line with it is this was perceived as good. They needed to thread the needle, and they did thread the needle. Now, for me, coming into tomorrow, retail sales, everyone's concerned about retail sales being the new thing. I also think you need to watch this very, very closely. Initial jobless claims, you need to stay under 250. Over 250, it's going to scare people. You get more into some of these other retail sales year over year, and we can get into that. But the big dog, and this is trading economics, they always put in red. So if you go and take a look at this, you're all over the place. You have a negative reading, negative here. You're just going to bonk around a lot with this. This is a pretty wild reading. So you can have a consensus and then the previous and then the actual, and they're going to be all over the place. So I don't put a lot of faith, and I don't really get that concerned about this particular reading. And I view it as anything as a overreaction when it does happen. Now, let's talk about the fun stuff. Louis Vuitton moved up. Why? I believe that these names are moving up because they're starting to see chances of a rate cut, more rate cuts over there and stimulating the economy. I just want to go through these. I really like this name a lot. I would watch this, but here's the point that I'm getting at. Here's Louis Vuitton, and it's up. Now, it doesn't look like it's up, but it is. It's up fairly decently from the close. As a matter of fact, let's just take a moment and do this. Now, if you are on the wait list, invitations are going out this week, but you're up about 2% on the day. Okay. And then if you go and take a look at Hermes and you look at how that's going, and you're up a little bit there too. You see these gaps? This is what makes these names so hard. And then on the day, you're up about 2% here. And then you're seeing this break out today. And I'm trying to figure out for the life of me why it was breaking out so much. And then it came to the realization that it's probably on that data. And this has got you up about 5%. Now look at this chart. I mean, that is just perfect. You've been basing now since February, and now you're finally breaking out. So I really do like this a lot. And it's definitely something I'm looking at. But this is showing a stronger consumer, or a chance of a stronger consumer over there. Now we have to see what we're going to do. For us tomorrow, I think our key levels are marked off fairly well. But we're also still seeing a buying in the interest rate names. Like if we look at Philip Morris on the weekly, you're still up. Take a look at this BTI. BTI, there we go. Would have been more dramatic if it happened the first time. And you can start seeing how we're starting to rock and roll up there. So when we're starting to look at this, we are seeing some underlying moves here, and I would suggest that this bodes well because we're broadening out on the market. A matter of fact, I'll just leave you with this. When you go back to RSP, which where we started, and you remember when we started looking at RSP, we'll drop this to a line just to refresh everybody's memory. And we started looking at this right around the same time as July 11th. And the reasoning was because we expected them to start diversifying out. And you'll remember this, where we started showing that our RSP and the SPY flipped right here. And what we did is we just dropped that right down to that 11. And then let's get that exact, which we can get that flip. And really where that happened was right here is exactly when it happened. And it happened because of the CPI number. So if you look at this, RSP is still up, but that zero line is really important. But we're still broadening out. Now, what I would suggest about this is if you go here and you look at these higher highs, well, we're still pushing and we're up. S&P's not. So what this is telling you is that the market is still broadening out. You might not like it in the way that it's trading, and it might not be advantageous to the way that you trade, but the market's broadening out and they are putting money to work.